Hi, this is Roger Conrad. I'm Chief Strategist for Portfolio 2020. What I want to talk about today is, again, underlying value versus near-term stock market valuation ups and downs, and particularly regarding some of the worries that are prevalent today on the global economy. A lot has been talked about with the Chinese economy and their attempts to rein in some inflationary pressures in their system. And people have sort of turned their back on a number of companies that have been wired into that phenomenon, and the rapid growth as that country has pretty much led the world economy out of the mire of 2008 and 2009. Obviously, we've made a number of bets based on the continued growth of Asia and that's ability to fuel resource price gains, to fuel innovation in technology from the nuclear power plant building spree that we see going on across China to the renewable power building spree going on across China. Obviously, electricity is very much needed, and demand for electricity continues to mushroom there. And that's where a lot of the focus of the industry, from pollution controls to just efficient generation to transmission and so forth, has focused itself. And at Portfolio 2020, we focused on companies that are driving some of this innovation, whether they be big companies that that are tacking from 20th century dominance to 21st century dominance, to technology companies such as American Superconductor or Ormat Technologies that have solid niches in areas that continue to grow. You know, all these have taken a dip in the past few months. A lot of volatility attached to that, so some of the dips have been accompanied by strong recoveries, and all that can be quite unnerving. But again, I think if you look at our portfolio there, and you'll see a lot of very inexpensive companies that are wired into very strong long-term trends, and you've got from those tremendous upside. We of course experienced tremendous upside in 2009 from off the lows of 2008, and we're seeing some retracement of some of those gains. I think we've got a lot more to go. Again, the difference is here you want to be a long-term investor, and being a long-term investor means focusing on the underlying businesses of the companies you own, not so much on the ups and downs of the marketplace that can really distort valuations at certain times, really distort where true worth of a company may lie. So again, I'd invite you to check out the portfolio. You'll notice maybe a couple of changes there. Ormat Technologies, we've upgraded again. They've made some nice progress dealing with some of the problems that hurt their first quarter earnings. I expect to see some stronger results. But most importantly, their ability to overcome some of their problems, I think, illustrates their staying power, and again, makes them the kind of company we want to continue to hold on to. So that's all I have to say today. Again, thanks for tuning in. I'll look forward to chatting with you next time.